Totally, yeah. But it was totally made up, and I was like in there for 2 or 3 days, and I had done everything right. I'd gone over there, done the interviews, planned everything, said goodbye to all my friends, landed in New York to come up, and then I'm sitting there going, what the you know, my French. I'm like, oh God. So I and I said, like, I can't do this, no way. So because it was criminal, like the whole thing, the whole enterprise. So I left.
Stephen is the CEO of GoldCore, one of the oldest gold and silver dealers in the market today. They've turned over $1 billion in transactions, and they manage $300 million in assets for their clients.
Stephen's got an extensive experience within the financial industry, and he's going to tell us a bit about what he does with GoldCore.
We became affiliate members of the London Bullion Market Association in London, which is the de facto regulator for the gold industry. I had this urge to kind of go to the big city, New York, and make my fortune. And when I was in my teens, the universe was telling me to go. I'd go out, I'd meet with these guys in big, large buildings in New York and whatever, and skyscrapers. They loved the accent. They were like, wow, your accent's amazing. When can you start? I'm like, oh, this is going to be brilliant. Like, there's no stopping me. So I did that for about a day or two, and then I realized what it was. It was like a pump and dump operation, which is I think the Wolf of Wall Street, basically.
Yeah. Pink slips.
Which is unbelievable.
Certainly, it's been my view anyway for quite a long time that gold has always been a good asset to hold.
That's why governments have it. There's a reason why central banks hold gold. It can't be destroyed. It's no one else's liability. It sits there. You could underpin a new strategy going forward. When you have a savings account at a bank, you don't have any money anymore. You are a creditor of that bank. That's what it is.
Like dirt tax and
there's no money there. It's not like they've got your money and they're holding it for you and keeping it safe. They've spent it or given it and lend it out, which is what they should do in the banking system. Over the last 20 years, if you put an allocation of gold in your portfolio at like 2.5%, 5%, or 10%, it'll reduce your Sharpe ratio, which is the measure of volatility relative to returns.
Hello and welcome back to another episode of Two Blokes Trading. This is episode 6, and I'm delighted to have Stephen Flood on here with us today from GoldCore. Stephen's got an extensive experience within the financial industry, and he's going to tell us a bit about what he does with GoldCore, and maybe you could explain to our listeners something about how you got into trading, what sparked your kind of interest within the commodity world, and maybe some of your background. I know you worked in Goldman Sachs.
Yeah. So what started me into trading? I suppose I had this urge to kind of go to the big city, New York, and make my fortune. And when I was in my teens, and I worked towards that. My older brothers at the time had been living in New York. They were working in like construction and different things, but I wanted to go there and pursue financial services. I remember I graduated from Portobello Business College. I did a lot of research, went over to New York for about a month, hung out with my brothers and their network, and I stayed over and I looked. I did a lot of interviews for brokerage companies. They were advertising in the New York Times. I'd go out, I'd meet with these guys in big, large buildings in New York and whatever, and skyscrapers. They loved the accent. They were like, wow, your accent's amazing. When can you start? I'm like, oh, fuck, this is going to be brilliant. Like, there's no stopping me. So I went back to Dublin and then, got all my affairs in order, got ready for the big move. I'd gotten a Morrison visa as well. It was a case of writing a single piece of paper and your name and address, and you sent it in, and that was it. And you went into the lottery, and I got that, So the universe was telling me to go. And then I came back and I had a big going away party up in Club 92, which is just up the road from where we're recording this. So like everything comes full circle. And I was saying bye to all my mates and headed off to New York, and I was so buzzing. And then I started my new job, and I go in my first day. And I go into this, like it was like the 50th story of some building, and I go past the main entrance, and I'm met by the guy who's going to be helping me and managing me, and I go past into this big brokerage floor, trading floor, and there's a big glass floor, a big glass office, and there's a big fat guy in there, and he's got this big yellow suit on, and there's other guys all around him, and they're all like, blinging, like, they've got all the big mad watches and stuff, and I'm like, okay, this is a very affluent area, and then I keep going, and then there's this big huge room, and there's about 20 guys at the top of the room, and they're all like suited and booted, and they're on the phones, bam bam bam, and then behind them there's about 200 guys crammed into these like really small desks. I'm like, okay, and in front of them there's these cards, like stacks of business cards, and there's a phone. And so straight down to the very back of the room I go, and I'm put beside some kid called Billy or something like that, and he's like 18 years old, and I'm like 20 or something like that, and I'm told by the guy who's managing me, he was working at the top of the room, and he says, okay, you take a card. You phone the number on it. You tell them you're calling from such and such investment company in New York City. You've got some investment research you want to send out to them. Find out how much they have to invest, and if they have less than 50,000, hang up the phone. If they've got more than 50 grand, tell them you're gonna get your senior researcher to speak to them, and then call me and give me the number, and I'll call them. I'll take the call. I was like, okay, fair enough. And then there's two tickers going across the top of on a ticker tape across the top of the room, right? Everyone can see it. And it's just two stocks. That's all there was, and the prices on them. And I was like, okay, interesting. So I did that for about a day or two, and then I realized what it was. It was like a pump and dump operation, which is I think the Wolf of Wall Street, basically.
Yeah. Pink slips,
which is unbelievable. They weren't even pink slips. No,
right, okay.
They were pre-IPO. Some of these things, right. And so this company had been set up. What they would do is they'd buy like some rinky-dink little business down in Florida, like a garage on the side of whatever. They pay $100 grand for it, and then they would just file the IPO documents. Just by filing them, they'd say pre-IPO. Get in early. This is where you're going to make a fortune. You're going to buy this at like 10 cents.
Speculation drives price, right?
Totally, yeah. But it was totally made up, and I was like in there for 2 or 3 days, and I had done everything right. I'd gone over there, done the interviews, planned everything, said goodbye to all my friends, landed in New York to come up, and then I'm sitting there and going, what the fuck, with my French. Okay. I'm like, oh God. So I and I said, like, I can't do this, no way. So because it was criminal, like the whole thing, the whole enterprise. So I left, and then I was like, I went to work with my friend. I was really, really, really low, and he was a painter. So he's like, hey, you can come painting with me. So for about 2 months then, in New Jersey, we're going around painting houses, and I'm not a painter. I have no clue. I'm not handy at all.
Learner though, huh?
Yeah. So, but then eventually I got a job with Bankers Trust. I was temping for them, and that's like a proper bank. Mm-hmm. And I worked there for the next 3 or 4 years, and I worked my way up. And again, the Irish accent was amazing. Like, you'd be at a big boardroom table, and when you speak, everyone stops, and they're just besotted with your accent, and whatever you say, it just goes. And it was really cool. And they'd ask me, oh yeah, hey Steve, where'd you go to college? And I'm like, oh, I went to Portobello Business College. Wow, I haven't heard of that. I'm like, well, it's the Harvard of Europe. And they're like, and it was like a private college. And I was like, and they were like, wow, it's amazing. But it was fun, and I had so much fun. It was an IT led department, and I got exposure to all the various different departments. We were changing the general ledger of the bank. Huge amount of product knowledge, and I was just loved it. And they flew me to Toronto and London and all sorts of stuff. It was great crack. And then I worked my way up eventually onto the trading desks. Then Bankers got shut down by Deutsche Bank. It was a big buyout. Mm-hmm. And then one of our clients was Goldman Sachs, and I got a call after a few weeks, and Goldman were actually opening the doors for the first time to non-Ivy League graduates. Like it was a strict policy, basically unwritten. So they allowed the great and the good and the street to come in the doors and to grow and scale, because they'd gone from a partnership to a public company. And so I was one of that first cohort that went in there, and it was just amazing, because they had no idea how to use technology, whereas Bankers was like really, really efficient, and there was so much power that you had as an individual to iterate and innovate. But with Goldman, like, it was, you could make so much impact just with all the skills I'd learned in Bankers. Mm-hmm. And it was incredible. So yeah, I worked there for a few years, and eventually made it up onto their equity derivative desk, and program trading in particular. which is a niche area where like large investment funds would want to buy the S&P 500 over the day, and they'd want to have a particular target in terms of volume weighted average pricing, and you'd be sending waves of trades down, and then you'd be taking the less liquid names, and you'd be farming them off to a specialist broker, and you'd be doing that all day. But like you're 24, 25 years old, you've got literally a supercomputer under your desk, you've got the biggest fund manager in the world sending you files in, and it was a huge responsibility, but it was really exciting. And I was like junior guy there, but like you're on a desk that would like literally move the S&P 500 many points any way they wanted, in any day. And the guys there are incredible. I learned so much from them. It was just an incredible experience.
Brilliant. Wow. So from there, what took you to GoldCore, or what took you into precious metals? Like, did you have an affinity to trading gold or silver or any other precious metals, or was it just did you fall into it?
I was going to say there was no master plan. I gave up on master planning, okay, because it didn't work. I was like, okay. So I suppose I'd been in New York for about 7 years. I realized that if I stayed there any longer, I'd start to think like a local. It'd be hard to ever come back home. I loved the idea of being back home. I got married to the lovely Paula, and I'm getting kudos for that one, by the way. And 9/11 just happened as well in 2001, and we were front and center for that. It was the most horrendous thing to see. The second airplane flew past our windows, and so it was very scary. And I was kind of looking for a reason to go. Goldman were downsizing a little bit. There were some packages on offer. I took with those, and I got my backpack and the new wife, and we headed off home to Ireland. But we decided to go the opposite way. We went west, so we went through California, New Zealand, Australia, and we did this big kind of tour.
Nice.
And then we ended back in Dublin about 5 months later, big beard on me, and big smile, and it was great after being in a suit for years, having that freedom, and hanging out in the Mekong, going down the Mekong River, and awesome. Then everything. Yeah, it was just incredible. Did China, Japan, lived on the beach, and got back to Dublin, and it was great. I thought basically I could walk into any asset manager here. With my experience, because a lot of the Irish asset managers, their portfolio trades would go to London, and then they would end up in New York, and they would end up with me, and so I was the guy at the end of the line who was processing them, and so I always knew that there was value to be had in terms of better improved conditions and terms. And when I went into the Irish investment managers, and I said, "Listen, I could definitely make a big difference to your bottom line here. Because there's ways and things that you can do things to improve." And they didn't want to know. They had no clue. They didn't give a crap about saving money. It was like, I'm not sure I want some New York guy coming in here and making me look bad. Or
I don't think that's changed much in the last 20 years.
It was shocking. It was like a real, and this is not to speak down to people who work in the government. It was kind of what you'd expect in the civil service, kind of back office.
Yeah.
But these guys were managing massive portfolios, and they were just not questioning what they were paying. They weren't looking for value. They weren't hungry, and there was no hustle. And I was like just blown away by it. It was crazy.
Antiquated systems.
Huh?
Antiquated systems.
Yeah, very antiquated systems, but antiquated attitudes.
Right.
I don't know what it's like now today, but I don't know. It was really quite shocking. So my friend from school days had set up, he had a great affinity with monetary history and history in general, and loved it. And he was looking at the property market at the time, and it was exploding. It was going up 20% a year, and people were getting rich, and people were getting accidentally rich and confusing it with their own success. Mm-hmm. And it was basically, European interest rates, just came into Ireland, and an interest rate is a really interesting thing, because it's a function of your capacity to repay money. It's a function of your cost of funds. It's a function of the competitive environment for rates and the collateral that you're putting forward and term. And we never had low interest rates because we weren't trustworthy enough to have low interest rates, because we're like, Asher would be grand, Yeah. And but we got suddenly German interest rates came in with the euro, and that's why we had a property. That's why peripheral Europe all exploded at the same time, because they got German rates, and then German money and excess funds. So Ireland was a complete basket case. As you probably remember,
sure.
There was delusion of grandeur everywhere, you know.
Yeah.
So he was looking at this and he was like, you know, this is all going to go really bad, you know, and it did. And he was totally right. And he said, well, if it does go bad, what will people then turn to? You know, what's a safe haven asset? Well, history tells us gold is a safe haven asset.
For centuries.
Who's selling gold? Nobody's selling gold.
Sure.
So it's 2003, and he established what was Gold and Silver Investments at the time in his apartment in Temple Bar. And by the way, his name is Mark O'Byrne. He's a great guy, and he's we're no longer working together. But he's doing his own project at the moment. But at the time, he had seen what was coming down the tracks, and I was his good friend from school who was also involved in banking and knew a lot about technology and all that kind of stuff. And he said, "Hey, listen, do you want to help me out?" So we went 50-50. So 2004, I joined, and we started in his apartment in Temple Bar with a notebook, and a really, really horrible old Sony computer laptop, and then he fecked off on holiday the first day and left me there for 2 weeks, and I had no idea what I was doing. So yeah, I couldn't read his writing on terrible writing. So, but we made it work, and then I started systemizing things. Yeah. So a lot of my learnings from Bankers Trust and Goldman, I started systemizing that, and slowly we built the business up. And most people in the Irish financial scene would just would turn their noses up at idea of gold, or it's a barbaric relic of what is that? It's like it's not the ISIC, blah blah blah. And so it was always shunned and looked down upon. But we started building the business, and there's a kind of a certain, you might call them gold bugs, but they're people who are. The people who buy gold tend to be very aware, well-heeled. They've traveled. They've made their own money. They're director types. They've made and lost money. Mm-hmm. They know the value of money. They don't buy into hedging. Exactly. They see it, and it's a very, very sensible thing when you look at having an allocation to gold. It's very sensible over the long term, because it's almost a hedge against the futility of man and the greed of man and the cycles that we have in our economies. Mm-hmm. So we started attracting these people, and it was like then some of the people who worked at those investment managers would become clients. We had clients from the Department of Finance who would come in and would not tell anybody they were buying gold, because even their wives wouldn't approve, but they were buying gold surreptitiously, and we were helping them. So we grew the business together. And then the global financial crisis started to kind of begin to happen, and we expanded quite aggressively. We hired a lot of people. We got a fancy office in Fitzwilliam Square. We had people literally lining out the street outside to come in to us. We had so much fun, and we realized that we were heavily dependent on transactional revenue. Mm-hmm. And what we wanted to do was probably, when people would buy gold from us, we would deliver it to them, but then we had no recurring revenue from that. So we said, well, people should probably have large amounts of gold not stored at home in their shoebox. Yeah. They should store it in Switzerland, or they should store it in Singapore or Hong Kong or somewhere like that. And so we said, well, what is it? Okay, that's a storage program, and that's great for cash flow. So, but what's the best storage program you could possibly want? And so we created a segregated allocated program where you have a specific bar with a serial number on it in your name, not on our balance sheet, on the shelf in Zurich, gathering dust until you say otherwise. Yeah. And it's completely outside the financial system. And it has its own account number on the GoldCore system, but you can then go in and check the vault independently of GoldCore and validate real time that it's there sitting on the shelf from the vault operator. And that's what we do today. And as a result, we've grown that business now, very successfully since then. And we have, tens of thousands of clients all over the world. And we have an amazing team now. And we have an office in Galway. We have an office in Donegal. We have an office in California. We have a small kind of satellite office in London. And we're here in Sandyford as well. And I think the one thing that I've learned with GoldCore, and we've had ups and downs, cycles and stuff like that, especially after the global financial crisis when the S&P was at 660 points and everybody was like, okay, it's not going any lower, let's pile in, and we don't need insurance anymore. So the gold market just completely disappeared. And there were some tough years as well at that point as we kind of had to scale down. And as I said before, I've learned more about I learned more scaling down than I did scaling up the business, because you really have to, watch every penny and, renegotiate contracts and look after all the different stakeholders and keep the ship running and pointed, towards your destination. So, yeah, we grew it from there, and that's how we got into gold. It was quite accidental on my part. It was quite insightful from Mark's point of view, and then I had the technical level and expertise to come in and help him grow that business. And yeah.
Sure. So for people who are interested in buying gold,
go for it.
That are listening to the podcast, how much gold would you need to really get to a point where you need storage, would you say? And obviously the storage comes with a cost level or a level of cost. So maybe you could explain that a small bit.
Well, we used to have a minimum, I think it was $10,000. We got rid of that because, what we found was a lot of people who would never have traditionally looked at gold. And the reason is because normal everyday investment managers never tell them about gold because it doesn't pay big commissions. A lot of the products that you buy are fat on commissions and incentives and trail commissions and stuff like that. So gold typically doesn't sit in there. It doesn't have a cash flow. So they look at it as a commodity. They don't see it as an investment. And I suppose technically they're right. It's not an investment because it doesn't create cash flow, but it is a very important component in a diversified portfolio. It has very unique properties that you don't find in anything else. So I would say everybody should have some gold, absolutely, without doubt. And the amount is really based on what you think about the world and where you think the world is going to go. There's an old Wall Street adage, which I've quoted a lot, which is put 10% of your money into gold and hope it doesn't work. Because if it goes up in price, everything else you have is going down in price. And that really tells you what it does. That's called diversification. Yeah. You don't want to bet on every horse that you think is going to win. You want a kind of an all-weather fund, which is what Dalio would talk about, and gold is 7% in his portfolio. So you can have gold. We don't have a minimum, so you can go in and buy it might be an ounce of gold, maybe 3,000 euros. You can buy gold. You can tell us what you want. We've got loads of products, and you can then choose where you want it stored. The biggest storage location is in Zurich, but we have storage here in Dublin as well, and it's again outside the financial system. It's in one of the most secure facilities in the entire country. Like literally Fort Knox. And we have it in Singapore, we have it in North America, and we have it in, as I say, Zurich and London as well.
We're having a gold rush right now. I mean, what do you think's causing that? I mean, obviously there's a number of things causing that, and generally there's lots of correlations, and then things are quite easy to understand. If this is happening, well, that's going to happen. But so many different factors at the moment, right? Obviously we've got Trump's presidency, we've got obviously trade wars going on, we've got geopolitical issues. There's so many different variables at the moment. What's been the main catalyst for gold to actually see the trajectory that it has?
It's a number of things. It's not retail led. So the man on the street's not buying gold yet, but I believe personally they will at some point. What we have is the fiat currency system is being debased and has been since the global financial crisis. Yep. But typically when you start debasing and printing money, there's a feel-good factor initially. It's like, whoa, there's loads of money. Oh, you want a bridge? Here's some money for a bridge. Yeah. Here, we're going to send you home. You don't have to work, and we'll pay your wages for however long. And, the politicians, once they get their hands on the printing press, and they compromise that system, you can everything looks good. But eventually you have to pay the bill. And what's happening now, those chickens are coming home to roost. And what we found is I would argue that gold isn't going up in value as much as the currencies are going down in value. There's a reason why you can't build a house on a living wage anymore. Mm-hmm. And the reason is because they printed so much money, commodities have gone up, they've exploded right across the world. You also don't have deflation being exported from China anymore. They've kind of matured now as an economy, so they've kind of they've hit a level. They're also consuming now. They've gone ahead of where they were before. Like they're not so much low cost labor market as they would have been in the past. Like I think Vietnam is now probably better in terms of value if you want to build something or make something. So there's a number of things. You have the dollar falling, massive inflation, money printing. You have demographics, which are not in our favor at all. You have environmental concerns as well. So all these factors are kind of coming home to roost. You also have a bull market that's been extraordinary, and so that's losing a bit of steam as well. So it's coming off, and people are looking at the cash flows because they're cash flow models.
Are inflows coming through because we're seeing that drop off in US stocks? You're seeing higher inflows?
Absolutely. Oh yeah, absolutely. We're and from mainstream, so you're seeing a lot of fund managers now looking at gold, going, God, look, that inanimate piece of metal has beat the pants off everything, and even the volatility isn't that bad anymore. It's actually less than an awful lot of S&P 500 stocks. So people are looking at gold now as kind of the price that you have to pay to have the financial insurance to protect your investment strategies, given the global realities into the future. And if the dollar is no longer king, and everybody is now like looking at the dollar and going, "You're naked as the day you were born," it's now lost all of its credentials, and the person running that economy looks completely detached in a lot of people's eyes. So the dollar is now, it also became weaponized, and this is probably the biggest factor in the last 18 months to 24 months is the weaponization of the dollar against Russia with the Ukraine conflict. And when they took Russia's sovereign funds and held them back, they basically locked them out of the dollar clearing system and locked away their funds. They essentially, for political purposes, weaponized the dollar. Now, if you're a central banker all over the world and you're looking at that going, well, we have loads of dollars as well, and we need them for oil imports and commodity imports because everything trades in dollars. Ooh, maybe we shouldn't have those treasuries anymore. Maybe we shouldn't have dollars. Why don't we actually take a step back and actually hold other currencies? And what other currencies are we going to own? Well, everything looks better now. And so there was a move away from dollars. They're replacing dollars on the central bank's balance sheets with gold. So gold purchases by central banks has just exploded.
And it's a hedge against inflation as well.
It's a hedge against the future, and it's a hedge against the future where you have a world where you don't have an American policeman anymore. You have an unknown multipolar world, which is kind of lurching towards conflict and weaponization in military kinetic war. So there's an awful lot of uncertainties out there. The retail public have not reacted to this. They're actually just in shock at the moment. They're going like, what is going on here?
On that, have the retail traders missed the big move, or are we? Do you think there's still a catalyst for further growth?
Oh, absolutely. Well, I would argue, is the dollar going to turn around and suddenly become trusted again? Are politicians going to step up and have policies that people can believe in? Yeah. I don't know. Is the globalization going to be reborn? Are we going to connect our economies together? Like literally, Europe has just been kicked literally in the face, and never saw it coming. And that's just in the last 6 weeks. So I would say the dollar will continue to lose its hold on the global economy, and by removing the de facto defense shield that was there, which was the price you paid America to use its dollars and to have access to its economy, that's now been pulled back. And so what's there for you? The fundamentals in the US economy are also quite shaky, demographic problems as well, and enormous debt. The debt is absolutely extraordinary, like $37 trillion, which is just a number that's almost too big to conceive. So I think, the dollar will continue to fall as long as it does, and as long as there's uncertainty as to what comes next. Gold will continue to appreciate in all currencies, and it is appreciating in every single currency right across the world. It's all-time record highs. And I think you need to have it. And if you're going to have an exposure to the stock market, to the bond market, to the property market, to the interest rate economy, which is essentially what these things are, own that contingent asset. And that's what really gold is. And there's no other contingent asset in the world like it. It's contingent in that its value goes up depending on the risk. And it's completely separate from everybody else in the economy. It doesn't need a renter to pay it rent for the value of that asset to hold.
Sure. I mean, the financial system itself is changing. We're going to like digital currencies now.
Yeah. How
do you think that's going to impact gold as a whole?
I think it's great. I mean, it's brilliant. No, I don't subscribe to the concept of I love the concept of digital currencies from a technical point of view and a utility point of view. I wouldn't trust the central bankers in the month of Sundays to actually have the right to control that, because it doesn't take, if you have, you're seeing it right now where people are I don't know how it's going to go, but like, when you give a government too much power, it's only a matter of time before they abuse it. So I'm more of a libertarian. I think the power should be with the people, and less regulation is better. Let the market decide where value and capital should be allocated, even though that's not, that can become excessive sometimes, and you have major cycles. But if you have a digital currency and it looks great, and you can paste things with your phone and tap, and the clearing system is much more efficient, and you don't have those fees in between and interchange fees and all that kind of jazz, fantastic. But what if they say, you know what, Jonathan, you haven't spent your salary this month. You need to spend some more money because we're going to start docking your account. We're going to have this extra fee on your bank account.
Or we have another situation where we have COVID or the next thing that happens, and we're only allowed to buy one toilet roll.
Yeah.
You know what I mean? Or we get to this system almost where we're trapped in the system.
Yeah,
right?
it's like electronic voting. I mean, why? Why do you want to have electronic voting? Because it looks cool? Well,
Yeah.
I think it's actually, the voting system is fantastic because it's a manual process where you have the community coming together and in this exercise. You don't need technology everywhere for the sake of technology. So a digital currency, I think it's probably okay for central banks, maybe large banks, but we as individuals need to have the control over our assets, and the ownership of assets is a cornerstone to every democracy, and the protection of those rights of ownership. And our currency, or whatever it is also an asset, and we've earned it and paid taxes on it. It's ours.
Like barter is gone right once that happens, right? And do you think then the likes of gold can ever come back as a potential area that you can barter or pay things with? Or do you ever think that it will get to a point where it could go the opposite way?
In what way?
So as technologies evolve and currencies change and there's lots of control over people's assets and so on, do you think it'll ever get to a point where we could use precious metals, whether silver, gold, or whatever, as a way of exchange?
Absolutely, yeah. There's no reason why not. I mean, again, technology is. I love blockchain. I think I've been a fan of blockchain for so long. I've worked on many projects which are involved in the gold industry, and I believe there's the strength you have with a mathematically rigorous ledger. It takes the human out of it. Gives power back to the people. But I wouldn't give that control in a private blockchain to a central bank to decide when and where and who and how you can spend your money. I believe in the market. People are incredibly intelligent in how they allocate resources when they come together in a market environment. And if you inform them and educate them and hold their sovereignty as high as you can, then let them do what they want to do. They'll decide.
Sure, it's funny to see how these cryptocurrencies really took a pullback in the market, but and people are seeing gold continue to rise. I personally, I've been an advocate of gold for quite a long time.
Yeah.
We were hitting them 2,000 levels a while ago, 2,500 levels. Yeah. We're like, we can't break above that. There's no way that we can break above that. But uncertainties were always going to create inflows into safe havens, and certainly it's been my view anyway for quite a long time that gold has always been a good asset to hold. Yeah,
I mean, I say 5 or 10% in there. That's all the sense of the world. And what I like to say, and investment managers and wealth managers and family offices and the people who manage these portfolios, one of the best arguments for gold in that environment is, we're going to be into a shaky environment. I think you get a 10% pullback, every 3 times. So 5%, between 5 and 10%, you can get that within 2 or 3 times in every year, in every market cycle, and you can have a 20% pullback every 3 to 5 years in the stock market. So you will have these pullbacks, but you don't want someone to sell under duress and the psychological duress if they're all in on the interest rate market environment economy. So by having gold in your portfolio, you'll find that it'll take the sting out of a correction. That will sharpen your mind. You're not all in on it. You can ride out those dips and keep holding. And buy and hold has always been a great strategy for an awful lot of people who are involved in the stock market. So I do think gold has a psychological crutch purpose for an awful lot of people, and that's actually its most important thing. That's why governments have it. There's a reason why central banks hold gold. I mean, it sounds completely counterintuitive because it costs money to store it there, but it's because when you have failed to such a degree that nobody trusts you, they will trust that you have gold because it's arguably valuable. It can't be destroyed. It's no one else's liability. It sits there. You could underpin a new strategy going forward. It's been around for 4,500 years. It's outlasted everything we know. So yeah,
it's notoriously volatile though, right? So that's one thing that maybe people, especially maybe retail investors, maybe on a little defense a small bit, especially after seeing the rise that we've had.
Well, I would say that it's not as volatile as the dollar is volatile in terms of its movements, and I think it's less volatile than an awful lot of the S&P 500. The MAGA stocks, it's way less volatile, and it's over the last 20 years. If you put an allocation of gold in your portfolio at like 2.5%, 5%, or 10%. It'll reduce your Sharpe ratio, which is the measure of volatility relative to returns. Yeah. And so if you're building a diversified portfolio as a fund manager or wealth manager, you want to add elements that will get you to what they call the efficient frontier, which is the risk risk return curve for your for your client, where they are. How much risk they want to take on, how much return can they get, and you want to get as much return for a given set of risk. So by adding gold to a portfolio over the long term, it actually gives you a boost in terms of your returns by reducing your risk. So it's been it's a very, very productive element to add to a portfolio, and there's absolutely tons of research to support that. And you can go to the World Gold Council, and they have fantastic research there in terms of gold as a strategic asset.
And for people trying to get into gold now, or maybe want to move into the space, what resources or books or what would you suggest for somebody getting into the market?
Yeah, I mean, what I would do is you can contact GoldCore, obviously. Say that. We have a great podcast, GoldCore TV, and we have a lot of really good commentators on there, and we go over the basics as well. And we also look at what's happening in the news cycle in terms of the gold market. I think if you want to start gold, there's a few different ways. And I know this is a kind of a trader podcast, and I break the world of investments into two. You have investors and you have speculators. Yeah. Speculators have a very much a shorter time frame. Yeah. So if you want to get into gold as a speculator, and this is not investment advice, but you would look at the cost to buy, the cost to hold, and the cost to sell. So your cost of ownership. And you use derivatives for that. You use CFDs, you use options and futures, whatever it is. And a futures a future contract, you put 5% down, you get 100% exposure. It's really cheap if you have enough margin to do that. And so that's a great way to, as a trader, to get exposure.
Absolutely.
But if you're an investor, you're looking at the longer term. You're looking at the kind of super cycles. You're looking at strategic allocations. And maybe you want to have exposure to the dollar, and not only the dollar, but the U.S. stock market, and maybe a specific sector. And as a euro client, you measure profit in euros. You may actually say, you know what, I need to have an allocation of gold, because if certain things were to happen in America, maybe there's a conflict with China over Taiwan or something like that. That volatility would be absorbed by a healthy gold allocation. So in that sense, you want something that is much more secure and outside the financial system. So then you call up GoldCore. We do we would have a strategy session with you, understand your needs, and then there's a number of different investments. So you could have individual coins, you could have bars, you could also look at our unallocated gold, which is a much lower cost option, which means you own physical gold, but it's going to be within a pool of gold that's held again off our balance sheet. Right. But it could be anywhere in the world, and that's a really low cost way of owning physical gold. The storage charges when you start to own gold for small amounts, it's around 1% per annum, but then those charges will fall to like 40 basis points or 0.4%. And no matter where you store it. So you could have, okay, there's 10,000 in gold, and I'm going to have two ounces, stored in Dublin, just down the road. I'm going to have another 2 in Zurich, and you can move them around if you want. You can take delivery of them. You can, you're never impeded by GoldCore. As I said, if God forbid we wound up tomorrow, all the gold is actually in your name, and it's your asset. So it's stored in what's called bailment, which is basically where you give us your property to store on your behalf, but it's never becomes our property. It's an old English law, and that's how we store all our clients' metal. So there's another product that we have, which we've been running for many years, called the Gold Saver. And that's really cool. I have a Gold Saver. My son has a Gold Saver. Loads of clients with it. And what that is, and it's really good. You basically, let's say you get paid on the first day of the month. On the second day of the month, we'll take an amount of money out of your bank account via direct debit, let's say 100 euros. And then we will put that into unallocated gold, and you'll own physical gold. But we'll do that every single month. So your cost averaging into the market. So you're going to ride out those peaks and troughs, and it's going to be done in a budget friendly way. And you wouldn't believe how that builds and grows over time. But what's really great is you're outside the financial system completely. It's not like a savings account. When you have a savings account at a bank, you don't have any money anymore. You are a creditor of that bank. That's what it is.
Like got dirt tax and
there's no money there. It's not like they've got your money and they're holding it for you and keeping it safe. They've spent it or given it and lent it out, which is what they should do in the banking system. But most people think that when you put money in the bank and you look at it,
stored in your little
and they look at the DOR and the COR on their credit statement, they're saying, "Oh, go look, DOR, there's my balance," and it's actually no, you're a debtor of the bank. That's their balance. That's their statement of their relationship with you. It's not your statement of your relationship with them. People get this completely backwards. It's not your statement, and you're a debtor, and the money is only as good as their capacity to repay you. So if you have lots and lots of cash, you should definitely spread it around in multiple institutions, and there's no reason why you shouldn't do that. And it just makes sense. And it's good for the banking system, arguably as well. Don't have all your eggs in one basket, even in times are good.
And is it insured? Like your gold, once you buy the gold and it's stored away,
fully insured.
And that's regulated.
Gold is as regulated as this table here that's in front of us. It's a commodity. So because it doesn't have a cash flow, it's not considered an investment. So it's not regulated in that sense. But we are, and we had a really, we became members, affiliate members of the London Bullion Market Association in London, which is the de facto regulator for the gold industry. So they work with like only the best of the best, like bullion banks and massive traders. We were the first Irish company ever, as far as we know, to be accepted in there recently, which is a huge coup for the company. We also obviously we adhere to AML legislation and KYC as well in terms of documenting our clients when they come in. We've thousands of customers all over the world. We're very client centric, like insanely up to almost obsessive about our clients' interests because we know how much trust they put in us. We are storing their kind of get out of jail card asset. It's their ultimate kind of asset. And so we want that to be highly liquid, and it is liquid. Most people think gold is kind of clunky and it's a bar, and where do I go with that? Literally, you get on the phone, we'll have that sold in seconds, and we'll have that money in your account, within a day or two. It's really liquid, and we make a two-way market because we have quite a lot of customers buying and selling all the time, and so we can. It's
capital gains.
Of course, there's capital gains on pretty much everything you invest and make a profit on, other than the home you own and certain government bonds. But you would have to pay capital gains, but that's for the investor to put on their annual return.
Absolutely. It's been really insightful.
Yeah,
I think that went on longer than we even expected.
Really?
I'm delighted. I learned a lot myself as well, and I really appreciate you.
You put a microphone in front of me. I won't stop talking.
Thank you so much, and thank you very much, guys, for joining us.
Thank you.